Welcome and thank you for joining us for another exciting session of Informally Formed. We're going to be talking about a very critical sector, the financial sector of Bangladesh. And talk about this very important subject is someone equally important who needs no introduction, Dr. Ahsan Mansur, Executive Director of Policy Research Institute, Bangladesh. Dr. Mansur started as a lecturer in the Department of Economics in Dhaka University, joined IMF in their economist program, and then went on to do his doctoral program in Canada. Now, his career with IMF is rather extensive. He has, in various capacities, worked in several different areas and in various countries, including the Middle Eastern countries, Asia, Africa, Central American countries, in various capacities. But most notably, he also served as the IMF Senior Resident Representative to Pakistan, and also as fiscal advisor to the Ministry of Finance in Bangladesh. And one of his notable accomplishments there was his instrumental role in rolling out the value-added tax program for Bangladesh. Also, I must mention that he served as the division chief of the Gulf Cooperation Council, and was also IMF mission chief for Saudi Arabia, Kuwait, and Oman. Now, I could go on, but I guess that would suffice. For people in the know, do not need any introduction of Dr. Ahsan Mansur. So, Dr. Mansur, a very warm welcome to our show.
Thank you. It's my pleasure.
Our today's topic is the financial sector. And Dr. Mansur, of course, you being also the chairman of BRAC Bank, I cannot imagine anyone who would be in a better position to talk about this sector than yourself. Dr. Mansur, your reflections on the capital market, let me just back up. Banks should not be in the business of funding for the long haul, right? So banks do working capital, trade financing, and what have you. Long-term capital is accessed through the markets, okay? You go raise equity, you go float a bond, that's where long-term. And then the payments, the businesses do well, payments come in the form of dividends or interest payments on your bonds. In our country, because there is such a dearth of the capital market, banks have been somehow fitting in to do that job, but there is a fundamental asset liability mismatch, and businesses hurt tremendously. So in any event, Dr. Mansur, your views on the capital market, what we ought to do, the bond market, what we ought to do, please.
Well, first, there are two separate issues. Bond market has its own unique problems, and they have to be dealt separately. And the stock market, as we call it, bond is also registered there, but the overall stock market, they have their own set of issues as well. I would think that at the moment the market is rallying, and there are several reasons for that. One reason is that there has been a change of management in the BSEC, Security Exchange Commission. In my view, it's a good team if they work diligently and continuously and maintain the quality of work, and they don't come under severe political pressure at times. They may be able to create a better governing situation, and that will help them. But still a long way to go. We should not start a victory celebration now. Secondly, as they say in the US, why the stock market is so high? The answer lies in Fed, interest rate policy. So same thing in Bangladesh. Part of the answer lies, a large part, in the lower interest rate environment. If you have very low interest rate, negative rate of return on your deposits, what will you do? You will explore in the stock market.
Absolutely.
And any flicker of hope that stock is going to go up, you will jump into that boat. Right. You don't want to be left out. That's happening. So we have to be careful that we don't want another. I don't say that we are there. We are not there. It's only just crossed 5,000 level as of last week. It has some way to go before it gets out of fundamentals. But at that being said, we have to be careful. and investors have to be careful. Third is that still I think a lot more could be done on the day-to-day, hour-to-hour, minute-to-minute surveillance of the trading. There is still a lot of speculative trading going on. A lot of small caps are moving up and then disappearing. Or companies that are closed for the last 10 years, suddenly they jump and go increase by 5-4, 10-fold, and that's, you don't hear about it. So that kind of thing must not happen. And it has to be monitored and shut up so that it doesn't disturb the market and destroy the investor base. Finally, I would also say the long haul is the most important. Our weakest point is our accounting, and we have a regulatory authority, FRA, has been enacted, Financial Regulatory Authority, and they're not very active. They need to be active as well, and do forceful work and take some exemplary actions on some of those accounting firms which are going along with fake accounts and so on. They must exist. Not finding is incompetence. It's not that they don't exist. They exist. You can't simply see that, or you don't want to see that.
Right.
So they have to work on that front for this health improvement. And people have to know what's there happening in the companies.
Yeah, absolutely. Absolutely.
Multinationals, I have no problem, but we have our own problem in our own domestic companies that they have to fix those things. Quality is important, quality of accounts.
Right, right. Dr. Mansur, everything that you talked about, totally makes sense to me. I would hope that the regulators also understand some of these fundamental things and how it operates and what they ought to do. For example, especially public listed companies, okay? They rely on the investors. What do they rely on? They rely on audited financial statements. Now, if there is no regulatory mechanism that assures that it has a certain level of integrity, okay, then let's say there is the credit rating agencies that start their work with the audited financial statements. And do you know that the credit rating agencies now, for some of the work, they get 4,000 or 5,000 taka? Because there is just, every sector that we have in Bangladesh, what we do is like in the banking sector, 50 some banks or plus. I mean, for a country the size of Bangladesh, so undue competition and stuff like that just kills it. So how do you expect a credit rating agency to do their work, quality work, for 4,000 or 5,000 taka? Please tell me. How can you expect audited financial statements to happen?
I remember my own experience with my own board. I always tell my auditors that you do your job. If you need more money, let us know. We'll pay for it. But do not compromise on the quality.
Right.
Because we as a board, we depend on them. But in many cases, the board is giving the signal otherwise. They're telling you don't see those things and I pay you money. So if that is the case, then what do you expect? So quality of rating agencies, quality of auditors, they are seriously questioned. And they need to be also held accountable to public and the law. And if any company has misstated, the auditors must be discredited and even debarred from doing practice in future. That's the example we have seen in the Enron crisis in US. You have seen that.
Right, right.
The world record audit firm disappeared in a week, disintegrated completely because Enron accounts were fake.
Which we also say cooked books. Dr. Mansur, we need a good oversight mechanism. But then at the same time, that oversight mechanism cannot become so burdensome where that's all you're doing is complying with some of the regulations. So there needs to be a balance between quality work as well as good oversight. And
I always tell our Bangladesh bank colleagues and others, even in my board, when they come to audit and before and after I meet them, I say that you are my other eye. You have to do a good job in seeing things, but don't count beans. Bean counting is not your job. Right. You have to find big things.
Right.
But unfortunately, in many cases, we comply on paper, not on substance. And I want to see the substance. important things, bring it to our notice, but don't bring a small things which is 10 taka, 20 taka issue. Don't bring it as an objection. This is not what we are looking for. We are looking for crores of taka issues.
Yeah, absolutely
And
right.
those things must not be allowed.
Yeah, it's the big picture items. The big picture items ought to be kept in mind. Dr. Mansoor, let me...
And also, regulator in Bangladesh, particularly Bangladesh Bank, I always say that they have become a burdensome problem for banks also, because this tons of paper has to be given in paper to them. I am sure nobody reads them. Why can't we electronically submit those things? They have to be responsive. They have to step in with time and with technology and require, cut out all the paperwork. And it can be done instantaneously. All the data is in the system. You can just send it out. You have to print it out, folder them, and then take respectfully, put them in a big sack and take it to them and present it nicely to them. Why?
Yeah, absolutely. Dr. Mansoor, let me, we're at the tail end of our conversation here, unfortunately. Again, whenever you're having fun, time flies away. Let me, in conclusion, ask you about the bond market and what do you see as the future of bond market? Let me just preface that by saying that in one of my recent conversations about real estate, you know, in United States, for example, right, in United States, where you have spent many years as well, the bond market, all the money in Bangladesh, you know, if we compare, in Bangladesh, all the money is stuck in equity. And that's not money in motion. Now, if we could somehow release that money into the marketplace, imagine the velocity that money will take and the multiplicative effort that will create. So in America, for instance, you know, with the Treasury bond, 30-year bond, you can have a fixed mortgage or a you know, adjustable rate mortgage, and then there are financial instruments that go with it. But in particular, bonds, okay, tied to the bonds. So we were suggesting that why can't we have a mortgage bond floated by the government, okay, floated by the government, and that can really be, that money, it can be floated abroad with a government guarantee, because our government, with its bank, you know, foreign, foreign currency reserves and what have you, we could possibly do that and bring that money in, let's say at 4% and stuff, and be able to lend it at 6%. And that way also, the banks right now, they're giving out for 8 years or 10 years or what have you, we could take it to 20, 30 years. Can you imagine just your reflection on that? Just on that, Dr. Mansoor, what do you think?
I think that's the biggest missed opportunity for the middle class, not having a bond market. They don't even know, middle class doesn't know what is bond.
Exactly.
But they're the victim, because they're not getting a mortgage at a rate that is affordable. They can't own the house at a time of their life when they really can enjoy it. Yeah. They have to save and then buy something, which is not the way that my fathers did and others grandfathers did. That is not the way modern day work. It should be securitized, and your income flow will be securitized and you can buy it. Absolutely. So issue is that we need, first of all, we need long-term treasury bonds. We don't have that actually. We have some long-term bonds, but they're not even traded. They are, every bank has bought it 20 years ago and put it in their permanently frozen in their own safety vault, not to be traded, because it gives nice yields and they keep on holding it. That is not the way you develop market. You need the liquidity in the market, and the market has to roll continuously. So government has to keep on issuing long-term bonds. The biggest detriment is the Sanchaya, which is non-tradable. And in today's world, you don't have non-tradable instrument, for God's sake, and non-market-based instrument, for God's sake. So you have created the biggest barrier to market development. Why would anybody buy a compare paper, be it issued by, say, Square or Pran or anybody at less than 12%? Why? Because they can get the buyers, the households and others who will be buying at the end of the day those instruments, they are getting safe bonds at 11.5% and at a much lower interest rate, lower tax rate. So government has created the biggest barrier to development of the bond market. That's one side. So there has to be in addition to that, there has to be other supply of bonds, other bonds. But that is also not happening. Government only borrows for the sake of borrowing, but they prefer treasury bills, short duration. Why? Because that is cheaper. They don't go for long. So there is not even a yield curve in Bangladesh. Without an yield curve, how do you price corporate bonds and other things? And how do the foreigners price it also? So we have a serious problem there. Secondly, I think at the end of the day, to develop the housing market, you need an institution like Freddie Mac.
Yeah, exactly. Sure.
They have to be the ultimate spinner of those assets. They spin it out and make make butter out of it, and that butter is enjoyed by the common people, along with the shareholders. So that is missing here. We need a government institution, government-backed institution, which will be market-based, which will create very long yield bonds and spin it off, sell it to other customers who wants to hold it, like insurance companies, pension funds. Pension fund is another area. We have to develop the demand side of the bond market. Where is the money going to go? Who's going to hold it? Where is the pension fund? There's none. Right. In the formal sense. Where is the pension regulatory authority? There is none. So these are the instruments and institutions that we are missing out. We have to look at the demand side. Pension and insurance industry is another big industry where they can invest in those big long-term bonds. But they're sick like anything. They are buying real estate in Gulshan. And I've seen, I can show you to a couple of those signboards bought by the insurance company. They have spent 200, 300 crore taka to buy land which does not give any return whatsoever. So that's how we are wasting our recyclable funds. And the third, I would say that our housing and land policy needs to be looked at. This Purvachal is 20-year-old. Land has been given. Not a single project has been built. Not a single house has been constructed there. Why? Because holding land is more profitable than building on the land. It's land speculation. And we don't tax it. We don't tax land speculation. In Saudi Arabia, while I was dealing with it, and I also visited Saudi Arabia as a fiscal advisor, as a monetary advisor to the Saudi Monetary Authority 2 years back. They have a policy, they introduced a policy, anybody who holds a piece of land in the urban areas, if he doesn't build it in 1 or 2 years' time, we will heavily tax it. So you cannot, it will be punitive for you to keep on holding a land. What is that policy in Bangladesh? If you do that, if you say every Purvachal, if you don't build it, I will tax you at the rate of like 2 lakh taka per year, or 5 lakh taka per year, or 10 lakh taka per year. They will immediately rush and build it and stop speculating on land. That's the kind of policy we need. It has to be demand side, supply side, and a balanced approach to create the fund, the liquidity in the system, and the governance structure.
Right. Very good. Dr. Mansur, it's not rocket science. Things have been done. I mean, take the blueprint. We don't have to reinvent the wheel on everything. You know, these are things that have already been, there are proven strategies all over the place.
You see, our government policy is to minimize cost of fund. So if we have that narrow perspective to the bond market, that I will issue only that amount of bond which I need, and in the maturity structure that I minimize my cost of fund, then you will never be able to develop a long-term bond market.
No, absolutely, absolutely. You cannot be penny wise, pound foolish. You have to look at it the long term. And of course, if bonds are not traded, just like you said, if bonds are not traded, obviously there is not going to be no yield curve. Okay, yield curve is only there when bonds are traded. So you find the yield to maturity and all that stuff. In any event, Dr. Mansur, thank you so much for your time. Dr. Mansur, it's been such a great pleasure. I would like to thank our audience for joining us. I hope you enjoyed the session as I did, and with an invitation for you to join us for our next session. Stay safe. I'll sign off right here. Bye-bye.